Let's check the markets because we do have an interesting story developing here. Apple obviously is the big story. Nasdaq's down for the fourth straight day. We're going to get to all that. Put up Meta, too, guys, because we're noticing, too, within the last 20 minutes or so, a real hard rollover for shares of Meta intraday. Look at that. So that's weighing on the Nasdaq as well. But, Josh, I go to you. We can start on Apple, and we can transition here as we try and we've been unable to find any direct news leading to what you're looking at on that chart. Nonetheless, that's just adding to sort of the issues that the Nasdaq is feeling at the moment, down 4 straight days. Apple, worst back-to-back losses in a few years. As goes Apple, so goes the market right now?
Maybe right this second, and we have to define market because the Dow is green and I have all kinds of stocks that are higher today. I think Apple is absolutely having a big impact on the other NASDAQ names. I don't know if there's Meta-specific news or if it's just people selling the Qs and money coming out of those stocks. But the Apple thing is tricky here. They have had this kind of saber-rattling stuff go on with the Chinese government before. Apple is one of the few companies that actually has a great relationship with the Chinese government historically. But it's always going to be a chess piece that, you know, can be knocked around anytime that there are tensions between the United States and China. We're all accustomed to that. There were all sorts of things going on when they were trying to launch new phones and China trying to bolster some of their domestic competitors. So we can't rule out that it's over. I would just say that this is a huge reaction to something that doesn't feel like fundamentally it's that big of a game changer. It's some government employees in China being told not to purchase an Apple phone for their work. That's as far as it goes. Could it get worse? It could.
Well,
but
the reports are that they might broaden it. I mean,
yeah, of course they might.
That's what's been happening. You know, Steph, Wolf today asks the question, is Apple finally breaking? They say, as you know, and I'm quoting here from their note, we're huge fans of relative performance, which is why the negative divergence on the stock's July 17th high only raises our suspicions. Looks to us like the stock wants to challenge the longer-term support on dual fronts in the low 160s. I just go back to the issue of, you know, you're underweight some of these names. You know, the market can't necessarily afford the Nasdaq to have a rollover. Can't afford the biggest stock in the market to all of a sudden have a bout of weakness, because it's going to be hard to overcome that.
Totally agree, and I think that the S&P 500 having 35% of its weightings in tech and in comm services. Also, it's not going to just be Apple that goes down. It's going to drag down a lot of other names, and you can't have that happen and the market actually participate higher. So here's the thing about Apple. It is so over-owned, right? And whether you're underweight or overweighted, some people believe you should be 7% weighted in the name. I think that's from a risk point of view, I couldn't do it. So I'm 1% weighted, which means I'm 6 basis points, 6% rather, underweight. That's the name, and it's been painful this year. But the stock's still up 36% in the year. It trades at 29 times earnings, and I'm not 100% sure why you would pay 29 times for earnings that are down 1%, total revenues that were down 5%, iPhone sales were down 2%. iPad sales were down 20%. So I get the story of gross margins, OPEX coming down, free cash flow. But I don't know if I want to pay 29 times. And in terms of the China data, China is 20% of total revenues. That's a big number, right? And so this, the iPhones, they do about 40 to 50 million in the region. And if you ban the government people, that's about 5 to 10 million. And for every 1 million iPhones, it's about a penny a share to earnings. So you can see it could get bigger if the ban broadens out.
It can all be much ado about nothing, too. I mean, there's, you know, it's like a act first, assess later market at the moment.
But when it's that over-owned, Scott, and it trades at 29 times,
that's the point. If this stock were lower,
yeah,
and had been less bid up, and there were less hot money in this situation, the reaction would have. Apple's down 7% over the last 2 days. And actually, we ran the numbers, how frequently does this happen? It doesn't happen often, but it has happened before, and it has never been great, to Stephanie's point, for the overall market. There have been 12 times on a rolling 2-day period, going back to September of 2022, where Apple has fallen by 7%. And that has coincided with broader market weakness because it is an important stock in every index. It's in every major ETF. But NVIDIA is down too. And I want to point out the NASDAQ has 73% of its components negative right now. So it's more than just Apple that's going on.